But the stock story of the session is the Aditya Birla Capital listing. Let's revisit the stock. It's now part of the bourses. And while the market might be divided on whether they see value in the business just as yet, or whether it's a long-term play and one needs to hold out, whether there will be future unlocking of value because it houses two key businesses in insurance as well as a mutual fund. All that remains to be determined in due course of time. But for now, what you can see on your screens, given that the stock is in T2T, the trading activity is very limited because you can only do delivery-based trades in Aditya Birla Capital, and which is why the price action is limited. But even so, to my mind, given that the recent stake sale by the end of July happened at roughly around 145 bucks, from an investor standpoint, the stakeholders are very well in the money. And where the stock goes from here really depends on market's perception about the potential of each one of those businesses. On the sidelines of the listing of ABCL, its MD, Ajay Srinivasan, spoke to ET Now's Tanya Khosla. He mentioned that the company's growth plans and future outlook have been pretty much laid out. So they are working with pretty much a given path to achieve their goals.
I had said that under the scheme that we had originally set out, we had set aside 5% for a strategic investor to come in at the holding company. In those discussions, and that option is always an open option for us.
Right, and in the NBFC business as well, I wanted to know, you said you'll start focusing more on the SME lending section and you don't have any plans for MFI at the moment. Could you explain the rationale behind that, the product mix, and how do you expect the overall business to grow?
So we think the SME sector is really a massive opportunity in the country. I mean, you look at the number of SMEs, and many of them don't have access to credit, many of them don't have access to adequate credit. So we think that that's a really large segment for us to be able to focus on. It gives us a long runway for growth for many years to come.
And within the housing segment as well, a very small base on your book. So which segments would you focus on in that?
So we started our housing finance business actually only 2.5 years ago. So we're relatively new, but we've been growing very rapidly. We now have a book of over 5,000 crores in the housing finance business. Our focus there is largely self-employed people, though we do cater to salaried employees as well. And we've recently launched our affordable housing business, so we'll use that to get into smaller towns in India.
Okay, last two questions, sir. Coming on the life, the life insurance segment, how do you see the premium growth coming? And because of demonetization, lots of physical savings have come to financial savings. So even the AMC business is expected to do very well. What are your plans for those two?
True, I think demonetization and the real rates in the economy are favoring financial assets, and we're seeing that across the board. Last year our life insurance business grew over 30%. First quarter again we've grown over 30%. So I think we've got good traction and good momentum, and I think we're starting to see more people putting money into financial assets, which really augurs well for us.
Right. Last question, sir. In terms of return to shareholders, etc., what is your target for the ROEs going forward? And also, lastly, any capital plans in coming apart from the PMG investment 700 crores?
So return of equity varies across our business lines. So we have very high returns in some businesses where there's no additional capital required, like our asset management business, and some of our newer businesses are obviously still in investment phase. So I don't think I can give you a single answer for return on equity. For as far as capital is concerned, we will require capital for our NBFC, for our housing finance company, for our health insurance business, and that's where bulk of our money will be going in.
Aditya Birla Capital, the big listing of the day, and currently lower by about 5%, but don't read too much into it because the stock is currently in T2T. So I think the bigger move is yet to come in about a week's time. But Sandeep Sabharwal as well joins in with his take on the markets. And Sandeep, before anything else, AB Capital, a buy at every point?
There are a lot of financial stocks in the market, so I think one has to take their pick, but I think Aditya Birla, so they are very well placed in the overall environment. So I would think that the stock should stabilize in a few days, and directionally it should be positive only.
But so is it a buy, or are you saying that there are better opportunities in the market?
So right now I'm personally not buying into it.
Okay.
But but my view is that it's directionally positive because there's
What's
so many.
the doubt in your mind?
There is no doubt because I have my own set also. So there is only so much you can allocate to a particular sector. So that's the whole thing.
You know, the only thing that was working in my mind seeing this listing is that Sandeep, you have ICICI Pru, which is a benchmark for insurance. You have Reliance Capital, which is going to be having up their MF business, and you know that's going to be hitting the market soon. And AB Cap right now houses both those entities, which are a chunk of the earnings profile that it shows on a consolidated basis as a conglomerate. At some point in time, they would be compelled to unlock value there, because that's, you know, the true potential under AB Cap would not be recognized.
See, I don't think people should be betting on it, because you have to analyze the companies group to group. So given that it comes from the Aditya Birla group, I don't think they'll be so interested in chopping off companies and just so that the equity value goes up.
Purely from the price discovery that that AB's Cap sees,
no, but
will they be able to capture the value of these two businesses to the fore, to the kind of potential that they have?
Whether they are able to or not, but the point is that if anyone wants to bet on this company thinking that it's going to be split into 2 companies or 3 companies, that's not going to happen.
Okay.
So you analyze this company as it is and then take a view. The reason why why I would buy, let's say, hold a L&T Finance Holdings or maybe a Manappuram vis-a-vis this company would be that the insurance company and asset management businesses, which form a big chunk of the total value, they are steady growth businesses. So you are not going to see 20, 30, 40% kind of growth in those businesses.
Okay, L&T Finance as well as Manappuram, a better pick right now is what Sandeep believes. But here's a word from Samir Arora, founder and fund manager at Helios Capital. He believes it's time to log out of technology and pharmaceuticals as a sector, in case you're still put in. He says shorting in India should be encouraged, and it's time to short private financial and select consumer staples as well.
Our pitch is that